Good morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lavisha Darat. It's a fresh day and looks like the rally could extend today. The GIFT Nifty is pointing out to a positive start for Indian markets, but a lot of action that is coming in from the US, where we saw that Donald. Like first up on your screen is the option queues data. We can see that the Nifty put call ratio has risen to 1.03 levels from 0.91 levels in the previous session. So that means that there is some kind of bullish sentiment which is prevailing in the markets as well, despite that, we have the volatility which is going on due to the ongoing Q3 season as well. The next on your screen is the F&O ban list. We have seen no new additions. However, the stocks that have been retained include the likes of Aditya Birla Fashion and Retail, Angel One, Bandhan Bank, Canfin Homes, Kalyan Jewellers, L&T Finance, Manappuram Finance, RBL Bank. Stock that have been removed from the F&O ban include the likes of Aarti Industries and Hindustan Copper. And next is your fund flows data. Well, FIs have once again, they have sold about 4,300 crore rupees worth of Indian equities, and DIIs, they have helped a good lending hand, and they have bought around 4,321 crore rupees worth of Indian equities. Now just a couple of minutes before we go to the opening bell, let's take a look at how the pre-open rates are stacking up at this point of time. Well, we can see that the Sensex is mildly doing okay at this point of time, and the Nifty is also pointing out to a good start for the Indian markets. But let's quickly get on board with the technical expert of the show, Ajit Mishra of Religare Broking. Ajit, good morning. So good to have you back. Do you believe this muted Q3 earnings season that we have so far, is it possible for Nifty to mount that 24,000 mark in the near term?
Yeah, good morning, Lavisha. And see, it's still seems like a very tough task considering that the kind of challenges that we have been facing. So earlier it was the FIS selling, continuous selling rather, and now with not so great start of the earnings season, obviously it becomes more difficult for Nifty to make any substantial change. Because yesterday, if you notice that markets were up because the banking took the charge and they were pushing the markets higher. But at the same time, the other heavyweights from the IT and other packs, they were still reeling under pressure. So in such a scenario, market can only make some pause, a consolidation or marginal recovery. But for a strong reversal, we need to have clues aligned, especially from the FIS desk as well. So as of now, we are not seeing any sign on that front. So it's just a normal recovery or a rebound within the overall downtrend. And keeping that in mind, yes, we can retrace to around 23,570, 23,700 zone as well within this consolidation. But eventually that 22,700 is something that the market may test. So as of now, it's a sell on rise market when it comes to the positional trend. Intraday, you'll continue to find opportunities on both sides. So as of now, banking is offering the helping hand, but expecting a strong up move from the current level, it seems a bit difficult at present.
Okay, a little difficult. Ajita, how do you see the bank Nifty to pan out? We also have the HDFC numbers which will be rolling out, tomorrow as well. So how do you expect the bank Nifty to perform at this point of time?
So in fact, the last week also, if you'll exclude Friday's session where post Axis Bank numbers, the banking index was down. Largely, we are trying to, see a better clues or outperformance from the banking index as of now. But here also we have multiple challenges when it comes to the overall, chart pattern place for the banking index, because it was in a range of around 50,000 to 54,500. For almost 4-5 months, and post this breakdown, we are just seeing a mean reversion to the neckline area of the pattern. So again, closer to around this 50,000 zone, banking index might again witness pressure. So it all depends basically how the earnings is going to pan out, because largely Axis and Kotak is behind us now. So SDFC, ICICI, these are the two big names, followed by SBI. So let's see how these numbers pans out. And in case if we see a recovery or a decisive close of 50,000 mark, then there's a possibility that this recovery may extend and we may see some reversal sign also in index.
Okay, all right. Ajit, apart from banking index, Nifty IT index, that had some mixed performance coming in for some of the IT companies. But anything that you're bullish on, Wipro, TCS, Tech Mahindra, or HCL Tech after its Q3 earnings have come out?
Yes, you are right. In fact, see, IT as a pack, they were trading at the record highs before the number announcement, and post numbers, we have seen that almost all the IT majors, barring Wipro, which ended on a strong footing yesterday, post numbers. So we have seen decent profit taking, and I feel that maybe in a day or two, or maximum in a week's time, we'll see this. Profit taking settling down. So it's a time basically to again start accumulating quality names like Infosys, TCS, HCL Tech. And you can include now Wipro also on the list based on the earnings. So large cap is something that I feel more comfortable with, considering that they are less volatile in comparison to the mid cap IT names. So yes, you can start accumulating most of these large cap IT names with a 6 months to a 1 year time horizon current levels.
Okay. All right. Let's take some stocks in focus. That is your Zomato. The company's net profit is more than halved in the third quarter, while revenue rose about 64% year on year. We also saw in the third quarter that the margin is expanded sharply by 140 basis points year on year, while the gross order value has risen about 17% year on year. Blinkit revenue has risen, but however, it has reported an EBITDA loss in the third quarter. Ajit, yesterday also Zomato, after the Q3 results came out, it sharply reacted to it, and it fell about 7% in yesterday's trading session, but it settled about 3% lower as well. How do you expect? Do you suggest investors to buy this fall at this point of time?
No, in fact, I would suggest that those who are holding long, they should definitely have a strict stop loss in place, because we have had seen a very strong run in Zomato, in the recent months, and almost like 4 5 months of consolidation that we were seeing in the stock in the range of 245 to 310. So we have finally seen a breakdown. So it's not a good sign, and plus the stock has also slipped below its major averages, long-term averages also. So this indicates a possibility of consolidation or further profit taking. So for any meaningful recovery or this bias to change, we need to cross and sustain above 265. So until we reclaim that mark, one should refrain from any fresh long position. And those with the existing long, they should definitely maintain a stop at 225.
225, all right. Let's see just a couple of minutes before we go to the opening bell, and let's see how the market is going to open today. Some nervousness could be on the sidelines of Trump swearing in as the 47th US president as well. But the first rates on your screen, well, Nifty is opened above that 23,400 mark, up about 75 points, 0.3% coming in for Nifty 50 as well. Sensex is also opened with a good set of gains, 100 points uptick, 77,200 odd levels for Sensex coming in. Advance decline ratio, still we are in the favor of the advances as well. Nifty mid cap has also opened strongly. Broader indices is also doing well at this point of time. Bank Nifty also, yesterday also Bank Nifty was one of the major movers, and today also it is one of the good performers at this point of time. Bank Nifty coming in, 0.3% gain for Bank Nifty coming in. But let's take at mid cap. Mid cap is also, it has turned about, green, but it has come off its cool high, and it is trading, flat in the red as well at this point of time. But let's see some sectors, how they are performing well. Nifty PSU Bank, after yesterday's run up, has seen some profit booking, and it is down about, just, 0.1% at this point of time. Nifty Auto Index, after yesterday's loss, has gained once again, and it is up about, 0.4% at this point of time. Some of the Nifty 50 gainers that include your Apollo Hospitals, Ultratech Cement, Tech Mahindra, which is doing well at this point of time. If you look at some of the other gainers, that include the likes of Cipla, Hindalco, and TCS as well, showing strong set of gains. Let's look at some of the top Nifty 50 losers at this point. ONGC not doing well. NTPC seeing a cut of about 0.7%. Trent also featuring in among the top Nifty 50 losers list. And Kotak Mahindra Bank, after yesterday's sharp run-up that we saw yesterday, it is seeing a bit of a profit booking, and it is down about 0.5%. SBI Life extending its losing streak to the second straight day, down about 0.4%. Adani Enterprises also seeing a bit of a decline, 0.5% for coming in for Adani Enterprises as well. But the next stock in focus definitely is your Paytm. The company saw that the net loss has narrowed in the third quarter. and even the revenue has fell about 36% year on year. The stock is flat in the green right now, 0.4% coming in. Ajit, past 1 month the stock is down 7%. How do you expect the stock to perform in the near term? It has been a game-changing story last year as well.
True, Lavisha. In fact, the stock has done exceptionally well in the recent months. It has almost reached to its 2023 highs, and after that, we are seeing this consolidation or volatile swings rather in the stock. I feel that the consolidation might extend further, considering the kind of gains that the stock has posted in the recent months. And until we break up below this 800 mark decisively, I believe it's a healthy consolidation. So broadly, this 950,000 to 800 is something that the stock might continue to hover in. From the very short-term perspective, this 910 is basically the immediate resistance, which is around the 20 days of exponential moving average. So let's say once we break this mark, then the stock
अरे
might
मेरा
again
लैपटॉप नहीं काम कर
make
रहा
an
है.
attempt towards 1000 and 1020 area.
Okay, all right. Let's take another stock in focus, that is your IDBI Bank. Well, the state-run lender's net profit has grown about 31% year on year in the third quarter, while total income has also risen about 14% year on year. Ajit, what is the next target that you can eye for IDBI Bank? We have seen some news on the advancement of divestment process as well. What are you eyeing for?
Yeah, that's right. And in fact, post that news, we saw a very strong recovery. The stock was at 65, 66 area. Now we are quoting at 85, 87. So let's say once we break this previous swing high around 87, the stock might extend this recovery towards 95 plus zone also. So if you have existing longs, you can stay put with 81 as a stop loss and 95 as a positional target.
Okay, 95 as a positional target. Let's move to another stock in focus, that is your Dixon Technology. The companies did see a good set of numbers in the third quarter. We saw that the net profit surged about 77% year on year, while revenue also more than doubled to 10,453 crore rupees. As a stock, Ajit, the past 6 months, Dixon Tech has seen a good run up as well. But now it did enter a phase of consolidation past 1 month as well. So, what are you eyeing on the charts? Today, it has taken a fall of about 8%.
Yeah, that's right. So it's been an exceptional run in the recent year for Dixon from almost 4,000 to 19,000 plus zone. And now we've started seeing some sign of cool off, and it's natural considering the kind of pace that the stock was earlier, witnessing. So now I feel that short-term bias is likely to remain sideways to negative. So 15,600, if you have any existing trading positions, that should be your strict stop loss. Once we break that mark, probably the stock might inch toward 13,800, 13,200 levels also. So from the trading point of view, it's very important to maintain stop losses, and 15,800 is a very key and crucial point. That is the 100 days of exponential moving average, which the stock has not tested in last several months. So let's say in case if it breaks this area, then definitely there could be some serious profit taking.
Okay, all right. That's the commentary coming in for Dixon Tech. Let's quickly take a look at some of the viewer queries. They have been waiting at this point of time, and let's see what they are posting on our live feed as well. The first query coming in from Nitin Shaji. He's asking Biocon whether or not we can enter at a new price point. Ajit, what do you suggest? Because we can see, after 23 December, it has seen a strong breakout, and the stock has been on an uptrend as well. Any fresh entry at this point of time?
That's true. Means within the pharma space, we are seeing mixed trend, and as of now, Biocon seems like clear outperformer, and we expect this outperformance to extend further. 420.25 is something that we are eyeing as an immediate target. So even at current levels with 390 as a closing stop loss, you can enter Biocon from the short term perspective also.
Okay, all right. 420 levels can be eyed for Biocon. Let's move to another viewer query. That is your Pooja Khanna. She's been holding idea at 11 per share, rupees per share, and she's asking what should be the target to exit and stop loss. Vodafone Idea, any views, Ajit, at this point?
So since the stock is now nearing her buying price, I would suggest now at least this time she should maintain a stop at 8.5. So once we break that mark, the again stock might go sideways. and 11 is a strong hurdle. So once we break that mark, that 12.5, and once we have a decisive close above that mark, then only we can see some decisive trend. So as of now, till 12, we have multiple resistance to cross. So if her view is short term, she may plan to reduce some position at current levels also, and remaining around 11 to 12 range.
11 to 12 range, that can be done. All right. Let's move to another viewer query. That is your Dhyaneshwaran has been asking the view on Chambal fertilizer and whether there is any fresh entry for the long term. Past 6 months, Ajit, the stock hasn't really moved anywhere. Declined about, very flat moves coming in for the stock as well. What are you eyeing for the next? Any fresh entry do you suggest at this point?
Within this space, in fact, Lavisha, it has done well considering that stock is still holding around its record highs, though it's almost like 5-6 months of consolidation within 440 to 540 range, and currently we are in the middle of the band. So yes, he can consider accumulating even at current levels with the long-term view. Once we cross this barrier of 540, the upper band of this consolidation range, 620, 630, something that the stock might test in next 2 to 3 months. So with 460 as a closing stop loss, if you are accumulating in the range of 480 to 500, definitely you can wait for 620 as a positional target in next 6 to 12 months.
Okay, all right. Let's move to another viewer query at this. Shweta is asking the view on Vijay Diagnostics. She's bought it at 1119, and she's asking what is the short-term view, whether or not we should hold or exit at this point. She's seeing a bit of a loss at this point, Ajit, but the stock has been on an uptrend in the past few months as well. What should she do?
Yes, so in fact, after this recent attempt of a new high, the stock, made a new high for a brief, and then since then we have been seeing, gradual decline in the stock. Though the volume is in the lower side, but it's a clear sign of the stock topping out. Means there's a possibility that the stock might not witness any strong recovery or a rebound. So my suggestion to her would be to maintain a stop at 1030 and use any recovery towards 1110, 1120 area to exit her longs.
Okay, all right. Let's move to another viewer query. That is your Kushore is asking the view on Union and Canara Bank at the current price and whether we should hold or add more of these two PSU stocks. Ajit, both of them haven't really performed well. Of course, PSU bank stocks haven't really performed well in the past few months. So how does the trend exhibit for the near term?
That's right. And in fact, the PSU pack otherwise also is gaining action. Obviously, in run up to the budget, you usually see such moves. And for Canara Bank, now we are closer to the resistance zone after this sharp recovery. 103 is basically the immediate resistance area. Once we surpass that hurdle, then probably 110, 112 is something that the stock might test. So as of now, I would recommend rather to reduce your position at current levels and wait for the stock to cross 103 decisively to re-enter.
Okay, all right. Let's move to another viewer query. That is your Raja is asking the view on Equinox India Development and what could be the near-term target. The stock has been doing well in today's trade, Ajit, up about 3%, and it did post a good Q3 set of numbers as well. What is the next that investors should eye out for?
Yeah, so the stock is likely to consolidate after this recent move. So I would recommend that the recent swing low should be your stop loss, and you can wait for 5 to 7% of the upside from the current levels.
Okay, all right. Let's look at another stock in focus. That is your Cipla. The pharma player Goa facility has received a single US FDA observation in the form of 483 following the inspection. And Cipla has stated that its commitment to working closely with the FDA to address this observation comprehensively as well within the stipulated timeline. Ajit, if you look at Cipla past 6 months, the stock hasn't really moved. It has been between the range of 1450 to 1500 as well. Should we expect the trend to continue?
Yes, so broadly the trend is likely to continue. It's just that since we have retested the lower band of this consolidation range, there's a possibility that the stock might witness some recovery. But upside seems capped because we have multiple resistances, moving average resistances around 1475 to 1500 zone. So the aggressive positioning is something that one should avoid. If you are holding any long positions, 1445, that should be a stop loss. And use recovery towards 1475 to 1500 zone to reduce your position.
Okay, all right. Let's take a look at another stock in focus, that is your Landmark Cars. The company has bagged a letter of intent from JSW MG to open new MG Select dealerships in Ahmedabad and Kolkata as well. Ajit, after December 12, the stock has entered a phase of consolidation. What can we expect from Landmark Cars? Can we expect a good run up coming ahead?
So it's likely to remain in a range because last time that when it made an attempt of recovery, it fizzled out from 700 mark, and again the stock is trading below its major averages. So it's not a good sign. Plus the volumes are very dry. So if the view is short term, I would definitely recommend to avoid such stock wherein the price participation alongside with volume is on almost very thin or very almost negligible. So if you have any investment time horizon, then downside seems capped. That is the only positive that I see in the stock. Means 580 is a strong base for the stock now. So if you're planning, let's say for 6 to 8 months, you can stay put and use recovery towards 660, 700 to reduce the position.
Okay, all right. Let's move to another viewer query. That is, your Satya is asking the view on CMS Info Systems and whether what levels to enter for the next 6 months. The stock has been on a downward trajectory, Ajit, and what can we eye next? Can we expect certain amount of breakout, or what can we eye for this stock?
Yeah, so the stock has declined sharply from its record highs, and now we are very close to its support area. Multiple supports we have around 420 to 430 area. So yes, you can start accumulating even at current levels, and for the entire position, you should maintain a stop at 400. In case of recovery, 460, 470 is going to be the first area of resistance, and then next around 500. So yes, the risk to reward looks favorable for the stock to accumulate with 400 as a stop loss.
Okay, all right. What about Kotak Mahindra Bank? Yesterday it did see a sharp run up, and today it is down about 0.5% at this point of time. But do you expect that the bullish run up and the bull run could continue for Kotak Mahindra Bank?
Yes, and in fact, a disclosure that we have recommended a buy on Kotak day for yesterday for long term, and 2160, 2200, if I'm not wrong, is the target zone that we have recommended to our clients. After this, this prolonged consolidation, it's almost like 3.5 years of consolidation that the stock has already witnessed. We are seeing sign of recovery both in terms of technical and fundamentals. So yes, if you are planning, let's say for 6 months to 1 year time horizon, you can start accumulating even at current levels. From the very short term perspective, 1840 should be a stop loss if you have any existing longs, and 1980 to 2040, that should be your target zone.
Okay, all right. Let's move to one of the top Nifty gainers of today. That is your Apollo Hospitals, seeing a sharp run up, and it is up about 2.5% at this point of time. This comes on the back of its partnership with University of Leicester to establish the Center for Digital Health and Precision Medicine at the Apollo University campus in Chittor as well. Apollo Hospitals, how does it look like on the charts, Ajit?
Yeah, so it's the stock has been witnessing consolidation, but amid all this profit taking, the stock would manage to hold its long-term averages. That clearly shows the overall uptrend is intact. It's just that the stock has lost momentum, and probably this consolidation might continue with the upper band around 72 to 7400. So if you are accumulating, then it's great. Short-term trend, it still looks sideways, means 70, 40, 17, 20 was the area for resistance. So from the trading point of view, I would recommend to avoid. But if you're planning accumulation, definitely you can do that in the range of 6800 to 7000 mark, with 6600 as a closing stop loss and 7400, 7600 as a positional target.
Okay, 7,000 we can eye out for Apollo Hospitals. Just one last question before we let you go, Ajit. What are your trading picks at this point of time? So far a subdued Q3 earnings, but what can investors be excited about?
Yeah, so we, in run up to the budget and otherwise also we are seeing selective stocks offering opportunities across sectors. So ABFRL, after this recent correction, we feel that the stock is set for the rebound or a reversal, short-term reversal. 295 is what we are eyeing. So with stop at 272, one can accumulate ABFRL at current levels. Then we have granules from the pharma space. The stock has been consolidating in a broader range, and the good part is that during the down days, it usually sees consolidation. So it means it doesn't participate much on the downside. So this is something which is additional positive to this stock. And 610 is what we are eyeing from the very short-term perspective, and positionally around 640. With stop at 580, we can accumulate granules as well.
All right. With that, we have to let you go, Ajit. But thank you so much for your time. We hope that we connect with you soon.
Certainly. Thank you.
Let's take a quick check of the markets, how they are performing at this point. Well, Sensex is down about 75 points and below that 77,000 levels as well. Nifty, however, is up about, standing tall in the green, but it is, managing to hold up flat in the green as well, above that 23,350 mark as well. Most of the advanced decline ratio, slowly and slowly we can see that, the declines have gotten increased as well.